Hi, it's John Lien from TaxSaleList.com. Today I want to give you a mathematical comparison of a tax lien investment where you end up with the property and a tax deed investment where you get the property. Which is the best investment? I'm going to let you decide. The assumption here is that the same house is offered in both sales and the house has a current market value of $100,000. Now, obviously, the same property couldn't be offered in a tax lien sale and a tax deed sale, but we want to make that assumption here to show the comparison. The taxes owed are $1,592.61, and the tax lien is purchased for that amount and has a 2-year redemption period, and it pays 15% interest if it redeems. In this example, it's not going to redeem. The taxes owed on the tax deed property are the same, $1,592.61, and the property sells at a very good price. It sells for 70% of market value, or $70,000. Now, the reality is a property like the one in the picture would probably sell for somewhere between 85 and 95% of current market value. Now, we're going to start with the tax lien analysis. We purchased the lien for $1,592.61. At the end of year 1, the lien has not redeemed, so you pay the subsequent taxes again of $1,592.61. At the end of year 2, the redemption period's over and the lien is not redeemed, so you pay the subsequent taxes again, another $1,592.61. You've now paid a total of $4,777.83 in taxes. Now, as a lien buyer, you have an obligation to notify all parties in interest. That's anybody who has an interest in the property. To do this, you do a title search. In our experience, we averaged about $85 on our title searches. So we're going to say that cost you $85. And you find that there are 9 parties in interest to notice. That costs you $25 for each, or a total of $225, so your total investment is now $5,087.83. Since the lien is not redeemed, you're going to go to deed and get the property. Now, to do that, you're going to get a lawyer, and this is going to cost you, in our example, about $3,500. The amount you pay is going to vary greatly by the state, and it's going to vary within a state by the lawyer, but we averaged about a $3,500 legal expense to get our properties. Your total investment in the property now is $8,587.83, and you've acquired the property for 8.5% of market value. You decide you want to fix it up a little, so you do some painting and you replace some carpet. The cost to do that is $3,000. Your total cost now to buy and fix up the property is $11,587.83. You want to sell the property, so you sell it at a quick sale price of 70% of market value with a quitclaim deed. No realtor. 70% of market value is a $30,000 discount. It's a 30% discount to current market prices, and you should have no problem doing this even in today's real estate market. Now, who would be the potential buyers? There are a lot of rehab companies that would jump at that opportunity. There are a lot of landlords who'd like to find a rental property. There are real estate investors that would look at that discount. And even tax deed investors would be interested in this property at a 30% discount. Okay, so your investment took 2.5 years. You made a profit of $58,412.17 on an investment of $11,587.83. That's an annualized return on your investment of 201.63%. Now let's examine the tax deed investment on the same property. As we said, the taxes are $1,592.61, but the property is bid up to 70% of market value, which, as I said, is a great deal. So you pay $70,000 to acquire the property. You decide you want to fix it up a little. You spend $3,000 for paint and carpet replacement. Remember, it's the same house as we looked at for the lien. After 6 months, you're able to sell the property at 100% of market value through a realtor, and you pay a $6,000 commission, 6%. Your net sales proceeds are $94,000. Your net profit is $21,000 on a 6-month investment of $73,000, or an annualized return on investment of 57.53%. Let's look at the two of them side by side. The cost of the property with the tax lien was $11,587.83. The cost of the property with the tax deed was $73,000. So the tax lien investment was $61,412.17 less. The tax lien profit was $58,412.17. The tax deed profit was $21,000. So the tax lien profit was $37,412.17 more. The return on investment for the tax lien was 201.63%. The return on investment for the tax deed was 57.53%. So the return on the tax lien investment was 144.1% greater. Now keep in mind, this comparison was done favoring the tax deed investment in acquisition cost. You acquired the tax deed property for 70% of market value, which very frankly I don't think is very realistic. I think in this market you would have probably paid a lot closer to 90% of market value. The 6-month holding period to sell the property at 100% of market value in this market in some parts of the country is extremely unrealistic. Properties are on the market for a year and a half in some parts of the country. So, my question to you, which of the two is the better investment? If you'd like to learn more about tax sales, go to www.taxsalelist.com and register for our free workshop, Introduction to Tax Sales. This is an informative 1-hour, no-hype webinar about how tax sales work and how you can benefit from tax sales. It gives you a chance to learn the facts, not the false promises that you're going to hear elsewhere. You can also subscribe below so you'll get notice of any other videos we will be doing about tax sales. Thanks for joining us, and if you like this video, we'd appreciate you leaving a comment or giving us a thumbs up. Have a good day.